Okay, so we're starting today's spreadsheet video. Now this is a help video to get you started with the spreadsheet. It's not meant to do the whole thing for you, but just kind of get you started. And remember, whenever I work with a spreadsheet, I always have multiple tabs at the bottom for different tasks to do. And you could use these little arrows to kind of go back and forth on them. The first tab here is income statement. So before you try to complete the spreadsheet on income statement, you need to go to the Pearson textbook and read on page 61 income statement. And this will go over the income statement and give you an example of an income statement and how it could be calculated and the main purposes of the income statement. So you need to make sure you read the chapter before you attempt any of these spreadsheet exercises. Okay, so in this exercise I give you, it's a very simple income statement. So I'm going to give you sales, shares outstanding, cost of goods sold, interest expense, selling and administrative expense, depreciation expense, preferred stock dividends, and taxes. And I have these boxes here are the ones that need to be filled in. So let me highlight those in yellow. So you need to fill these boxes in. So first box is cost of goods sold. Where could I possibly find that? Oh, it's right here, 200,000. Wow, this is easier than I thought. 200,000. Now, second box, gross profit. There's no gross profit up here, so what do I have to do? Well, obviously that's a calculation. So you want to look at your Pearson textbook and get an idea of how to calculate these things. Now, the income statement is something that you should have went over in Introduction to Business, in Financial Accounting. It's a very basic tool. To calculate your gross profit, you would subtract your sales minus cost of goods sold. It makes perfect sense, right? Then selling and administration expense. Again, you look up here. Oh, selling and administration expense, 40,000. And then depreciation expense. Where is that? Oh, here, depreciation expense, 20,000. Okay, so these aren't. This is a text box. So you can't copy the information. You have to retype it down here. And then operating profits. So how would you calculate operating profits? Well, anything that's an expense, think of an expense in your real life. You're going to be spending an expense. It comes out of your profits. So we have our profits minus our two expenses, and we have our operating expenses. Okay, so we're going to continue in that vein here. I want you to try the rest of it yourself. As far as calculating, finding earnings before taxes, and taxes here is just a straight number. You don't have to actually even calculate it. So actually, let's do that. For operating profit, interest expense, it's right here, interest expense. And then earnings before taxes, I take my operating earnings less my expense, I get my earnings per taxes. And then taxes, you don't have to calculate. It's just written for you right here, 100,000. So very simple. A lot of times they'll give you a percentage that you need to multiply by. So then, so again, you're just following through, and you have your outstanding shares and your earnings per share. So I'm not going to do this whole form for you. I want you to try some of this. Again, this is the most basic income statement that you can find. This would be probably the most simplistic income statement here. So you should be able to do this basic concept. So I want you to try the rest of that. And then we move into something a little bit more complex. So this income statement is a warm-up. And again, you want to refresh your memory just on how that is built. Now, if we go to the spreadsheet exercise, this is a much bigger exercise here. And what I'm asking you to do here, the income statement and balance sheets are the primary reports that, of course, any management is going to use to figure out how good a company is doing. And we're also going to be looking at, who else is going to be looking at this? You got your shareholders, your stockholders, same thing, regulatory bodies, general public. And this is the primary historical financial information that analysts would use to figure out whether or not a company is performing well. So the first thing we have here is our income statement. And our income statement here is just the numbers. These are actually in cells, so you could reference them. and we have our December 2015 and our December 2014 income statement. Again, a very basic income statement. And now I also have the balance sheet. So the balance sheet written out in a long form. We have our cash, short-term assets, long-term assets. Let's see. We have our short-term liabilities, long-term liabilities, and our equity. So we have 2015 and 2014. Okay, so this is what I want you to do here. I want you to create a spreadsheet similar to Table 3.1 following this model. So what is Table 3.1? I'm referencing the textbook. So Table 3.1, here is Table 3.1 on page 62. So this is an income statement. So let's go back. So there you go. Multiple step comparison income statement for the periods 2015, 2014. Common size income statement covering years 2015 and 2014. So create a common size income statement. So again, going back to Pearson, if we jump to page, let's go to 83, and you get the common size income statement. So here, now how to calculate a common size income statement? Well, you should read common size income statement. And basically, when you do a common size income statement, you're dividing everything by sales. So everything is a percentage of sales in a common size income statement. Okay, so back to the spreadsheet. All right, so let's do this part A first. Okay, I've been nice and I've already laid out the template for you and created the boxes where you need to fill in the information. So here, you would say sales, go up here, and you would find sales for 2015. And then we would want cost of goods sold. Again, go up here, cost of goods sold. And then we want operating profits and operating profits. Now, the formula is sales minus cost of goods sold, 69,208. So if I go up here, you see there's no gross profits here because it's not giving you the calculated amounts. General selling and administration expense, again. Other taxes. All right. So EBITDA, earnings before interest, taxes, depreciation, amortization. And this is basically taking your gross profit minus your selling expense minus your taxes, and you get your EBITDA. So, and now, so that's 2015 information. If I just drag these formulas over to 2014, oh, that doesn't work because I think it must be in a different cell. Oh, yeah, we're skipping a column. So it's in column H. Okay. So this is I. So this is, I can't drag it over. Okay. So, let's see. Other taxes. I think these are mixed up here. Selling and administration expense. Let's see. And other taxes. Other taxes. Here we go. Okay. Yeah, so that copying the formulas won't work over because they're not in cells next to each other. And the information up there is a column between them. So you'd have to just redo those basic formulas again here. Okay, so now the rest of this, I don't expect you to complete this. I don't want to do everything for you, but just give you an idea of how this works. So you kind of pull the information in, you make your calculations. Now the common size is pretty simple. You want to take, everything's going to be divided by sales. So for 2015, I take sales and divide it by sales. It's 100%. And then I want to take 2015 sales and divide it by, nope, I'm sorry. I want to take 2015 cost of goods sold and divide it by 2015 sales. Now, what I want to do is, Let's move this frame up here a bit. Okay. So what I want to do in the cell is I want to lock down G76. So this is 76 here, and this is G. So I want to lock down G76. So I'm going to hit F4 to put these two dollar signs in front. So that locks down the cell. So now I can just double click this. When this icon turns from a white cross to a white plus to a black plus, double click it, and it will copy the formula all the way down. But that looks sloppy. I want to undo that. So instead of double clicking, I'm just going to drag this formula down. And this gives me, this will calculate the common size balance sheet, common size income statement for 2015 for all these items. Okay. Now for 2014, it's the same thing. Sales, everything's going to be divided by sales. So again, if I want to just lock in F4, to, you could also just insert dollar signs before the H and the 7, and then I can create this common size percentages. So this is everything is just the item, cost of goods sold divided by sales, gross profits divided by sales, selling divided by sales. And we do this because we want to see if there's an improvement. So here, cost of goods sold, the cost of goods sold went up. So we don't like cost going up, so that's not good. And operating profits went down, so that's not good. This is why we do the common size. We want to see everything related to sales. Taxes went up, EBITDA went down. So taxes going up isn't good, and earnings going down isn't good. So we can see that things are deteriorating, and that's why we do this common size percentages, so we could quickly discover what's happening between years. Okay, so that is part A, what to do in part A. Let's go to part B here. Create a spreadsheet similar to table 3.2. Model the following: a detailed comparison balance sheet for Dayton for years 2015-2014, and a common size balance sheet covering 2015-2014. Okay, so table 3.2. That must be in my textbook. So I'm just going to type search table 3.2. Click on that. Nope. Exactly what I wanted. Table 3.2. Okay, so I'm searching the textbook for table 3.2. 3.4, 3.3, 3.2. Okay, so on page 65. So here I have this is going to be a comparative balance sheet. So it lists it out, and just moving ahead. So it's good to kind of read through the textbook, get some ideas of what they're talking about here. Okay, so that's the table we want to work with. Back to the spreadsheet. Okay, so let's go down. So I've created the balance sheet template for you here. And again, you want to follow through with inputting the cells. So cash, receivables, inventory. See, it's nice that they're in a row, so I can kind of just copy them down quickly. Other. And then do 2014. 2014. Cash, receivables, inventory, other, current assets. So I'm going to put that cell here. And since they're all in a row, I can just kind of drag this formula down. And then for total assets, I'm going to sum, put it in the sum to calculate that column. And again, just in the sum and then the range. Okay. So I've got the total assets done. I'm going to let you complete the non-current assets, total liabilities. I might actually have to go down to the total. Yeah, so you know what? Let me do property, plant, and equipment. So go up here, property, plant, and equipment, accumulated depreciation, non-recurring assets. Okay, accumulated depreciation, probably gonna, let's see if this, okay, so 15, so just double checking, 15, 204, 110, 19. 204, 110. Okay, so this might be a different cell here actually. Other non-current assets. Okay. Property, plant, and equipment. Yeah, so I'm just double checking this to see that my numbers are in the right boxes. Okay, actually, wait. Property, plant, and equipment gross. Property, plant, and equipment gross. Accumulated depreciation. Okay, so I see what's going on here. So this is gross. This is accumulated depreciation. This is a formula, actually. So to get the net, I have to take the property, plant, and equipment gross, and I'm going to subtract the depreciation because it's an expense. So this is my, and then the non-recurring is correct. Non-recurring. Okay. All right. And then I'm just going to sum that. And I'm going to, actually it's not a sum. I need to take the property, plant, and equipment net and add to, I'm just summing the last two cells. So let's do that again because that was confusing and I'm sorry. So I'm going to do 2014 and it'll be much clearer. Property, plant, and equipment gross. I'm going to go up to 2014 balance sheet. Property, plant, and equipment gross right here, very simple. And then depreciation, accumulated depreciation, right here, accumulated depreciation. Let me get the plus on there. Okay, so the property, plant, and equipment net, this is a formula. I have to add the property, plant, and equipment minus the accumulated depreciation. Because this basically is saying this is what my assets are on cash in the books, what I paid for them, but they deteriorated. Like a car loses value over time, some of my assets lost value. That's what depreciation represents. So this is what the new value of my assets are after I subtract out depreciation. Other non-current assets, this is just a cell I'm going to grab up here. So let me hit plus. Enter. Okay, and this last cell is also a formula. Total non-current assets. I'm going to add my net and add my non-current assets together. So whenever it says total, usually you're adding something. Okay, so the total assets here, I'm going to take my total non-current assets plus my total assets. So it makes sense, right? I'm adding up my totals. Total plus total. Okay, so I got my total assets. Now how do you do the common size percentage? So here, what we do is we divide everything by total assets. This is total assets. So this, I'm going to make sure it's in the percentage. And I'm going to lock down, again, I'm going to lock down the total asset column. So lock down total assets, and then I can just bring this formula down here. Again, copy this formula, change it to a percent, copy that down. Let's see. Oh, okay, I want to copy this in here. Okay. All right, so it should be 100% here because I'm dividing total assets by total assets. And then for 2014, again, I'm going to take each of the items in 2014 and I'm going to divide by the total assets for it. I'm going to make this a percentage. Copy this down. Okay, see, this is what happens when you don't lock in the cell. So I have to lock the cell, otherwise it drifts. You can see here it's going to H22, H23, H24. So I have to lock it down with these dollar signs, otherwise it'll drift and I won't be able to easily copy the formula down. Cancel. Okay. Copying the formula here. Bring it down. Copy and paste. Okay. So, pretty simple. Okay, so the next part is we're going to look at doing the liabilities in shareholders' equity section. So again, you go up to the balance sheet here, you pull down your items. You don't type it over, just you hit the plus key and select the cells just like I did before. But for your common size portion, you're going to take the formula for this is going to be the current cell. So here we're going to use G126 and divide by G141. And we want to lock down G141 as what I'm calculating, because instead of using total assets, now that we're in the liabilities and equity system side of the balance sheet, we use total liabilities and equity as what we're going to use to calculate the common size percentage. So it makes sense, right? Here we use total assets to do the asset percentages for common size, and here we're doing liabilities and shareholders' equity, so we're going to use the total liability and shareholders' equity, calculate the percentages in the common size balance sheet for this section. Okay, so moving on to the ratio, operating ratios. Let's go back down here. Okay, create a spreadsheet similar to 3.8, perform the following analysis. So table 3.8, again, let's go to the textbook. 3.8, let's type in table 3.8 in the search box. Nope. Searching for a table. Table 3.8. So we want to find this somewhere. These are the problems. Oh, this is too far. Let's go back to 85. Okay, table 3.7. So this is, if you look at, it says 3.8, but if we look at this, looks this is the, okay, so we're going to find the next table, 3.8. Okay, this is 3.8. It's sideways, but basically this table is important. I don't know how to spin this around though. Anyway, this table is important in your textbook because it gives you all the financial ratio formulas that you're going to need. And it puts it together in a, you get a year over year, 2014, 2015, industry average, and then whether or not you're doing, if the ratio is good or bad. Okay, but this is important, and it's a two-page table that gives you all the formulas you're going to need to calculate these ratios. So you look up the formula, and then you're going to input the formula here using the data from these sections, income statement balance sheet up here, or the income statement balance sheet that you created here. You can use these inputs too. You might need some inputs there. So you create your financial ratios here. So current ratio, for example, you would go to Pearson and you would see what is the current ratio. Current ratio is current assets divided by current liabilities. So then we would go plus total current assets divided by I didn't finish this section, but I would divide by total current liabilities. So here, just to put that in, and I get my ratio. And I should probably make this only, I don't need to be that. It's not pi, don't need to calculate it that far out. And then I would do the same for 2014. Put that information in. Okay, so then I have 2015 1.15 and 2014 1.18. So we're going down. So is that better or worse? So what we should do here, it says circle 1, but what we're going to do here is that this number is going down. So for a current ratio, we want that number to go up. So you would just type in here better. Delete this. Better. So just type it in here. You don't have to circle. Just type, is it better or worse? So you do that for all of these ratios here and these market ratios. And again, you just have to go back to the textbook to see the formulas and create the formulas in here, and then you create your and then you analyze them, compare, and tell me which is better or worse, and just retype better or worse in this cell here. Okay, so now let's move on to the third part of the spreadsheet, and here we have an industry comparison. So here we have information from McDonald's, Wendy's, and Yum. Yum brand is Taco Bell, Pizza Hut, KFC. Okay, so we have, again, I put in information. This is information from the income statement and balance sheet in here. And I put in the information for each of these companies. And then I created industry average. Basically, how I created industry average is I just added these three cells up together. So you see these three cells, I added them together, and I divided by 3. So this is my industry average. Okay, so then down here, again, you're going to use the financial ratio formulas to calculate the ratio. So for current ratio, we're going to take current assets divided by current liabilities. And we're going to do that for each company. And then for the average, I'm just going to, again, add all three cells together and then divide by 3. But remember, you have to use parentheses if you're making a series of additions before you divide. So I get an industry average here. So you do this for all of these ratios here, and then you get an industry average. And I put a couple of hints on a few of the cells that are some of the formulas. And the ones where the lower the ratio is better, I gave a couple hints here. So a couple comments and some hints. So again, this is doing an industry comparison. So the industry comparison is different than a time comparative. So comparative is looking at year over year, sort of like in any financial simulation or analysis of a company. You want to see how you're doing year over year. Are you improving or not improving? So your year over year change is very important, and that's what we're kind of analyzing here. And the industry analysis is now seeing how your company compares to competitors and the industry average. Okay, so that is the spreadsheet for Chapter 3. It's a pretty involved spreadsheet, takes some time, but it reinforces all the key elements of Chapter 3, financial statements and financial ratio analysis. Okay, have a good time with this spreadsheet, and remember, I'm grading you on effort, not correctness. So if you get a few things wrong or a couple things aren't correct, I'm not going to take points off. I'm just looking to see here that you're creating formulas, you're working with Excel, because Excel is important. This is what your employers want you to know when you graduate, and this is what you need to be proficient in. And the only way to really get proficient in Excel is to constantly use it. It's like writing. The more you write, the better you get at it. The more you do Excel, the better you get at Excel. Okay, thank you for your time, and I'll talk to you again soon.